Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic. In today's video, we're going to be looking at Medical Properties Trust. I don't know why that went green, but that's pretty cool. Here's blue. Okay, so today we're looking at Medical Properties Trust. I actually haven't done a video like this on my profile yet where I look into the market cap and the financials and I go over the balance sheet, income statement, and statement of cash flow. I actually have done over 400 or 500 of these kind of like checks over companies. This is my bread and butter, and I'm hoping that maybe I can give a little insight to you guys on how I read a income statement, balance sheet, and statement of cash flow. And we can review Medical Properties Trust. If this is a company you're currently interested in, then I can kind of show you what my thoughts are and kind of give you a general sense of what people are thinking about the company right now, because it's at a pretty decent valuation and it does have a pretty high dividend yield. Just going back here, looking at it at 13%. But we're going to dive into everything today. And as always, subscribe. I recorded a video about 3 hours ago. Got 48 views already. That's pretty good. And we're up to 320 subscribers, so can't complain at all. Having a good day. Just went to the gym, coming back, hitting a video. Let's do it. So today we're talking about Medical Properties Trust, currently listed at about $8.90. And it's a $5.3 billion company. The way I like to look at it is I like to look at the earnings per share and then the dividend. And you can see that the dividend, they're paying out $1.16, but their earnings per share is only 49 cents. So where's this dividend being paid? I really want to check that balance sheet and make sure they're not going into debt to pay that dividend, because that is not a good sign. But first, what we're going to do is we're going to start with the income statement. What I like to do is I like to keep it on annual to begin with and then move to quarterly after. What I like to see is exactly this. I like to see 2019, they were at 800 million, then they went up to 1.2, 1.5. They're kind of sticking around the same where they were at in 2021, 2022. Their operating income or loss, I like to see that growing every single year. It's got to be growing every year because the company, like inflation is there. So inflation, you got to price that in. And at the same time, the company's got to be growing if you want their stock price to grow. Net income has been growing, which I love to see. Now we're going to move to their balance sheet. Okay, looking at their total current assets, that's just kind of like cash on hand and things like that. You can see their cash. Whoa. Remember how I said we went back to that dividend where it was 49? They were earning 49 cents and paying out a dividend of $1.16. Yeah, check this cash. Absolutely depleting. So they're probably going into some cash reserves to pay that dividend. But we can see more of that also in the statement of cash flow later. So I'm not too concerned. Okay, looking at their total assets, they're building up until about 2021, and then they slowly started to probably sell off some assets to generate some cash and get themselves out of some trouble there. Looking at their current liabilities, okay, so you know what? Obviously, with growing assets, you're going to have growing liabilities too. What I like to see is at least like 1.5 or double for the assets to liabilities, which it's somewhat about there. We'll call this about 20 billion, and then this is about 11 billion, 10 billion, give or take. So that's okay. That's not too bad. Now going to this statement of cash flow, net cash provided by operations got to be growing. As you can see, I had a little bit of a slowdown here going into 2022, and there was probably a big boom in, this is a healthcare REIT, and so there's probably a big boom in 2021, and that's why it might have gone down a little bit. Let's see. So their net cash used for investing. So this is cash that they use from the business. And this means that they're investing. When it's negative, it means they're investing. And when it's positive, that means they're taken out of their investments or they're selling their investments. And that could be selling their properties. So their debt repayments, they're repaying their debt slowly. Dividends paid about we'll call it 700,000, and the free cash flow is just narrowly beating that at 739,000, which is good that it's beating it, but at the same time it's very close. I know there was a big like spiel about the stock and saying there might be a dividend cut, because looking at their historical prices, they do actually increase their dividend every year except for this year, as you notice. So every 4 months, dividend increase. But in this year, they weren't able to increase their dividend as they weren't generating enough cash. And so that dividend is staying at that 29-cent level. A lot of people thought they were going to cut it. They never did. Kudos to them. But if they're taking out cash to finance that, that is no good. Now, I like to go into their quarterly results to figure out whether I want to buy the stock now or if I feel like it's better to hold off. And as you can see, they had a good quarter like in the second last quarter, but then the last one they kind of fell off a little cliff here. Not like they fell off a cliff, but you know, like they went down a little bit, right? Looking at their net income, holy crap, they were negative 140. Okay, I remember that. I think they had a little, not like a lawsuit, but one of their partners wasn't paying out. And if I'm wrong, you guys can totally correct me in the comments. That's totally cool. Yeah, one of their companies who rents hospitals from them wasn't actually paying anything to them, and so they lost. And then also their net income here, it slowly went back to positive, but it's still barely positive. That's not what you want to see, really. And let's just see their balance sheet here. So their current assets, total cash, okay, their total cash went up a little bit, which is good. That's what I like to see, because you know they got to finance that dividend and their other business practices. Obviously the business is more important than the dividend itself. You can see their total assets went down a little bit. Current debt went up a little bit, so hopefully they're not taking on cash to pay that dividend. Their long-term debt staying at 10.5 billion, so that's quite a bit. And then looking at their cash flow, just a little quick, going into the quarterly results, you can see their net cash provided by operations went down from 181 million to 135 million. It's a big drop. And their dividends paid was a lot more than that, so that's something to look out for. It was greater than their free cash flow. You see in this one here, they were able to cover it, but in their last one, they weren't. So that's something to look out for if their cash keeps dropping. So what am I doing with MPW? I'm actually a holder of MPW. Just to zoom in here a little bit, make it a bit more clear for you guys. So I hold MPW. I have about 80 shares, and my cost basis, my average price is about $10.55. I'm down 16%. Roughly $136. Like, I'm decently happy with the position because I am receiving about I'm receiving about $92 from MPW. And actually this upcoming month, if I go out here to my payout calendar, you can see that in the month of July, I will actually be receiving a dividend from MPW. Where is it here? Okay, wrong month. My bad, guys. Oh my God, I should be fired from YouTube. I'm taking too long. Look at this. So I'm going to receive $23.20 from MPW. So not a bad dividend at all. I'm not currently going to be adding to this position, even though it's at a great price. If it does drop to something ridiculous like $6, I probably will add just to lower my cost basis of that $10.55. But for now, I don't really want to be adding to this because I see better opportunities in the market. Okay, let me zoom out of here. Yeah, I see better opportunities in the market, and why am I going to put my money where I see better opportunities? Only to lower this cost basis. That's the only reason I do it. Maybe get up to that 100 share level just to make it look nice and even and pretty. So that was just a little update on MPW. Those are my thoughts and going through the balance sheet. I hope that kind of like helped you decide whether or not you think it's still a good company or not, or just to give you a little overview and, you know, to go through it with someone. You can go through it with me. It's all good. If you guys like these videos where I go through the income statement, balance sheet, and statement of cash flow, please do subscribe and just let me know in the comments. Just talk to me, and it's all good. We can do it together. That was just a little video on MPW. If you want me to do a full stock deep dive into like their portfolio and you know what they hold and everything like that, let me know and I could totally do that. For now, just continue to subscribe, enjoy the content, and I will see you guys in the next video. Take care.